This is the Financial News Network. I'm Christy Duffy. Comcast earnings were down over 8% in the third quarter. The company's balance sheet was weighed down by its acquisition plans of General Electric's NBC-Universal. Revenue rose, however, up about 7% to $5.9 billion. With me to discuss Comcast is Kaufman Brothers analyst Todd Mitchell. Todd, how did the quarter compare against your own EPS and revenue estimates?
Revenues were modestly higher, as was EPS, versus my expectations.
What is Comcast's subscriber count for the third quarter, and how did that compare to your estimates?
I think that you saw that they lost more subscribers, basic subs, than I expected. Down 275. I was down 150. I think that 275 was in general a little bit higher than expectations. If you want to know what I think kind of the hot button issue is and why the stock is responding well, is I think basic sub losses is the hot button issue, as is pricing. And they saw higher basic sub losses, but the pricing, the ARPU numbers were good and solid. And I think what they did very well on the call was sort of talk to the source of the basic sub losses, and they gave really 4 points, which I think are very credible. That being, 1, just general weakness in the housing market. 2, a tough comp coming off of the analog to digital transition, and they did highlight that 40% of their churn was low-end customers who had come in on promotional packages during that period. 3, they took a price increase across 75% of their footprint versus 3% a year ago. And 4, they did highlight that while churn was high, they saw an improvement on a monthly basis over the course of the quarter, and that continued into October.
And what was the churn number?
They don't give a churn number, but they did say that the source of sub losses was churn, and that they saw an improvement on a monthly basis over the course of the quarter, and that October was an improvement over September.
What about ARPU?
ARPU per basic sub was up about 10%, and more importantly, ARPU per RGU was up about 1 or 2%.
Subscriber count slid. Do you expect this downtrend to continue?
Yeah, I think that I think what you're seeing is, the universe. It's a fully penetrated product. The universe is not getting any bigger. They've got increased competition intramurally, and then there is some impact from over the top. I think the game for cable is more revenues per sub, fewer subs.
Do you see any threat from more affordable options like Hulu.com, Netflix?
I really don't. I think that that's something people want to hang on, but at this point, we've done some surveys on over-the-top stuff, and most of the over-the-top people who are using these services are early adapters, younger, fairly affluent. Then they're essentially adding incremental services rather than cutting services. I think that the weakness in basic subs comes from primarily a weak economy, and secondarily competition from the telcos.
All right, so Apple TV, Google TV, if those products catch on, you don't think of them as a threat to Comcast?
On the margin maybe, but not. No, I don't. I think it's been way overhyped and way overblown as to the potential disruption from Apple TV or Google TV. The fact of the matter is that two-box solutions just don't sell well. Look at TiVo.
Okay, well, you did say that the economy has had an impact. Are they considering lowering monthly subscription fees?
I think they're not. I think that shows it in the ARPU. They've been very disciplined on their pricing. What they're doing is basically focusing in on the quality of the subscribers and letting lower quality or subscribers or people who are having economic difficulties just churn. And that's why you're seeing the subscriber losses. I think you're seeing them primarily at the low end.
Did the company provide any update on its NBC-Universal merger?
Other than to say that they expect to close it by the end of the quarter, there was nothing definitive.
Has there been any follow-up related to content being potentially withheld from rivals? And do you think the FCC will get more active in light of the Cablevision-Fox dispute?
I think Comcast will have to make concessions, in order to get the merger, but I think most of the concessions will fall within the context of, it's already a fairly regulated business in terms of must carry. I think with Cablevision and Fox, what they're actually trying to do is, I think Cablevision's trying to draw the regulators in.
The FCC hasn't approved the merger yet. Do you see it as a done deal?
Yeah, I think at this point it's a done deal.
How do you see the stock performing on the back end of the merger decision from the FCC?
I think that the NBC merger has been an overhang on the stock. I think as long as the terms of the deal and the concessions that the Comcast needs to make to get the deal done with the FCC are not too onerous, it'll probably have a positive impact on the stock.
What's your price target?
My price target going into the print was 21. I'll probably put that under review.
Is Comcast your favorite name in the space?
No, it's not. I think it is a relative outperformer to some of the other cable names right now. But frankly, we are most aggressive with the satellite companies right now.
What's your rating?
I have Comcast rated to hold.
So you wouldn't advise clients to commit more or new money to the stock?
I'll be honest with you. I'm thinking about. I would say that this was an affirming quarter for some trends that I want to say on the core fundamentals, and so that's positive. And I would say NBC going away or getting closed is also a positive. Those would probably be the two catalysts to get more constructive on the name.
Okay, thank you, Todd. I find what you said very interesting, especially when contrasted with what many media outlets are reporting, that Boxy, Roku, Netflix, Apple TV, Google TV, these competitors will pose real threats in the future.
They're just wrong.
Well, then what are these reports in response to? What are they looking at, and where is the disconnect?
I mean, they're looking at adoption rates off of a zero base, so they look very fast. They're looking. I mean, you look at Netflix. I mean, Netflix has gotten huge subscriber growth, but it's because they got put on those gaming consoles, which were, a Trojan horse. Every one of those is hooked up to the internet and to a TV. So right away, you can increase your subscriber base. But think about Google and Apple trying to build that organically. There were 60 million gaming consoles already in people's houses. So that's how Netflix got those numbers. The idea that you're going to go out and sell 60 million Google or Apple TV devices is, I don't see that as being realistic. So I think that the threat of the over-the-top, I mean, there's definitely going to be a more robust over-the-top ecosystem, but the threat to the managed service providers at this juncture is way overblown. One, by the media, and two,
Okay, but if the FCC rules that Comcast NBC will not be allowed to withhold content from online competitors, this poses a threat you cannot rule out, as consumers could drop cable for a cheaper option. There are already program access rules offline which state that any cable operators that own programming have to make it available to competitors on non-discriminatory terms.
All of the regulations on withholding content have to do with must-carry regulations regarding the FCC. Basically, if you're a broadcast network, you're granted, public airways to broadcast over. So it says that if you give your content to one of the distributors in your footprint, you have to give it to the other. That has nothing to do with the internet and withholding your, NBC content from AOL.com.
All right, we'll leave it there. Thank you, Todd.
All right, anytime.
This is the Financial News Network. For more earnings and analysis, make sure you're subscribed to our YouTube channel. I'm Christy Duffy.